Let's welcome in Richard Clarida. He's the former Federal Reserve Vice Chairman, now Global Economic Advisor to PIMCO. It's good to see you. Thanks for coming on today.
Yeah, thanks for having me on.
What's the Fed thinking right now?
Well, I think the Fed has a lot of experience looking at very volatile markets. I don't think that anything has changed relative to what we heard from the chair on Friday. They think that they're in a good place. They think the economy entered the year strong, but the chair did correctly highlight there's a lot of uncertainty right now. Trade policy, tax policy, spending policy, immigration policy, and geopolitics are all quite uncertain, and so I think markets are reacting to that. But I don't think the Fed's fundamentally doing anything different than we heard on Friday from the chair.
What happens if the economy weakens like the market fears, but inflation is still above target and we still have unknowns relative to tariff policy? What does Chair Powell do?
I was looking intently to see if the chair on Friday would repeat what he has said at recent press conferences, which is that they would cut rates if the unemployment rate went up, if the labor market or the economy slowed sharply. So I take them at their word. I think that they have a dual mandate. Ideally, they would like to cut rates with inflation back all the way to target, but I think they've pretty consistently made the case that if we see a pronounced slowing in the economy and an elevation in the unemployment rate, that they'll begin to adjust rates lower, and I'd expect them to do so.
So you're essentially saying that the Fed put is alive and well?
Well, certainly, if you actually get a tangible weakening in the economy, I don't think that they would cut rates into a forecast of a weakening. I think they'd have to see it in the hard data. But yes, just based upon what the chair and others have said, I think if they see that in the hard data, given right now where we are in inflation, Scott, on a 12-month basis, the inflation numbers are likely to continue to come down for the next several months. And so I think at least over this time frame through the first half of the year, if we do get that slowing, and let me say, I don't expect that. That's not my baseline. But in a scenario that you lay out, yes, I do think they would be cutting.
What role does this market upset play in their thinking?
Well, right now, markets are still quite close to all-time highs. If I were still back in my old seat, I'd be interpreting some of this in the stock market as perhaps, a welcome adjustment to markets that maybe have been a bit frothy. And I think some of your previous guests were making similar points. Obviously markets can go up and go down, but when you're close to all-time highs and close to all-time highs in terms of valuation, I think right now to them it looks like more of a reversion to maybe somewhat more sensible levels. Again, profit outlook for the year, from what I understand, is pretty solid. So I think that they'd also be focusing on that.